Want to unlock the secrets of today's financial markets? You're in the right place.
Absolutely. Today we'll dissect insights on inflation, CPI, and FOMC crashes from top analysts.
Let's dive into David Lin's analysis of the recent CPI data and how it impacts our investments. And stick around. Jeremy Szafron will share crucial trading strategies you won't want to miss.
That's right. Plus, we'll wrap up with Matthew Tuttle's outlook on tech stocks versus inflation.
Just remember, this content is for educational purposes and not investment advice. You won't believe what's just happened. George Gammon is facing some serious censorship on YouTube.
It's shocking and raises serious questions about what we can and cannot say in this digital age.
Wait, his entire Russian channel was removed? That sounds extreme.
I received an email stating my Russian channel violated misinformation policies. But what misinformation?
It sounds like a blanket excuse. No previous strikes or warnings.
This can't be just about a few videos. It's like they're targeting critical voices.
George, how could your Russian channel get flagged while others stand intact?
That's exactly the mystery. It seems like they flagged it as spam, which is ridiculous.
It's like they're casting a net without checking what's inside.
This goes beyond my channel. It's about the community we're trying to build.
So you're saying that if we don't protect these digital spaces, we lose our voice?
Exactly. Where do we go if we can't discuss important issues freely?
You mentioned Rebel Capitalist Live. How can real-life interactions counteract this digital censorship?
It's vital we establish those communities. When things get tough online, we adapt.
So basically, it's about building what we can't rely on digitally anymore.
What's next if this continues? Will we see even more censorship, especially on financial discussions?
It's a likely scenario, especially in languages that may provoke specific scrutiny.
Isn't it ironic that the more they censor, the more people want to know what's being hidden?
In the end, it's about standing up for our freedoms, even when it's tough.
Absolutely. We need to remember that together, we can overcome these hurdles.
So it's time to become active participants, not just passive consumers of content.
Wow, Jeff Snyder claims global bond yields are crashing, starting especially in China. What's causing all this?
It's a major collapse. Just recently, China's bond yields plummeted like a stone. And guess what? US dollars and European bonds are impacted in tandem.
Hold on. Are we saying the entire global financial landscape is linked to China's bond market? That's pretty intense.
Absolutely. As Jeff explains, when Chinese bond yields drop significantly, it influences interest rates globally, including those set by central banks.
It's not just a China issue. The bond markets are sending us big signals about central banks. They're letting market rates dictate terms instead.
Is that dangerous for the global economy, Jeff? It sure sounds like it.
So we're on the brink of not just a national, but a worldwide economic shift. What does that mean for everyday investors?
Jeff highlights that just weeks ago, Chinese 3-year yields were at 2.23%. That's a stunning shift, isn't it?
They went down 37 basis points in about 3 weeks. That's like going from a sunny day to a heavy storm without warning.
So, are these clues about China's economy or the global economy? What are the implications for investors?
Jeff believes if China descends further towards record lows, other markets will follow like dominoes.
That's a compelling picture. So should we brace for a full shift in how we view traditional investments?
If rates drop globally, won't that affect savings and fixed income investments negatively?
Ultimately, it's about recognizing the signs early. The game is changing right under us.
It's like sailing in unknown waters. Keeping an eye on the shifting winds is essential.
So adaptability is the key takeaway here. What's the first step one should take?
Today, the market's pulse is quickening, especially with NVDA facing a major gap down while Tesla is soaring. What's driving these movements?
Exactly. It's a tumultuous landscape today. With retail sales data dropping soon, consumer spending power is under the microscope.
NVIDIA is on everyone's mind too. Are we looking at a complete market meltdown with their stock?
Retail sales will likely set the tempo today. If the numbers are good, it could buoy the market.
Conversely, if NVIDIA can't assert itself, we might see panic selling, especially in tech.
So it's kind of a coin toss. Consumer behavior could lead to a rewarding session or a chaotic one.
With features like AI-driven shopping assistance on the rise, how could they skew retail spending?
Good point. Increased spending online might give brick-and-mortar stores a run for their money. Should we prepare for a potential tumble below $125 if things go awry?
It's certainly a possibility. We need to keep a sharp eye on how it performs today. Thus, while Tesla might be the steed at the front, NVDA could be the dragon chasing it down.
And as always, risk management is key. Investors should never underestimate the backflip of the market.
Bitcoin just hit $107,000. What a ride. Matthew Tuttle, the mastermind behind Tuttle Capital, is here to break it down for us.
It's a historic high fueled by several factors, including major announcements from the White House and shifting investor sentiment.
Wait, are you saying this is more than just hype? What's driving this surge?
The Bitcoin ETF was a game changer. It democratizes access to Bitcoin for average investors who previously hesitated.
So with the ETF, everyone can just jump in. But isn't it risky?
Risk is part of the game, but regulations like these help stabilize the market, making it less of a Wild West.
Trump's announcement on Bitcoin has stirred excitement, showcasing the government's willingness to embrace crypto.
But does this mean the US is ready to compete with countries like Russia on crypto?
Exactly. With countries diving into Bitcoin reserves, it's becoming a strategic asset globally.
Hitting $100,000 wasn't just about the news, it's a psychological marker for investors.
So are we expecting a dip? Past experience suggests that such surges lead to corrections.
Exactly. It's the nature of parabolic moves. Many investors will want to cash out for profit.
Matthew predicts Bitcoin may eventually rival gold, hitting up to $600,000.
That's ambitious. What would need to happen for that to become reality?
Increased adoption by individuals and institutions alongside a more stable regulatory environment. Matthew foresees Bitcoin achieving widespread acceptance, especially if governments adopt it.
But will there be roadblocks? Certain institutions are still hesitant about cryptocurrency.
It's a double-edged sword. Governmental support can bolster prices, but skepticism can halt progress.
Investors must acknowledge the impact of government strategies and major psychological price points.
In essence, Bitcoin isn't just an investment, it's a shifting paradigm.
So what's the takeaway for new investors? Stay educated and adaptable.
We're diving into the precious metals market with Randy Smallwood from Wheaton Precious Metals.
Great to be here, Jeremy. The gold market is certainly exciting right now.
Wait, gold is at historical highs? That's quite the comeback.
We've seen a shift where the East controls gold increasingly. The West hasn't fully joined the party yet.
So what drives this demand? Is the US dollar losing appeal?
Absolutely, and that's changing the entire dynamic of gold investing.
With central banks buying gold relentlessly, it's clear they're distancing themselves from the dollar.
It's fascinating. But what does that mean for investors in the West?
The West needs to wake up to the opportunity presented by gold's rise.
Silver's industrial demand is way up, but it still plays second fiddle to gold.
Does that dampen its potential, especially with so much tech reliance?
Exactly, but that potential is poised for a comeback.
With geopolitical tensions rising, gold becomes even more desirable.
So how does inflation tie into all this?
Inflation drives consumers back to gold as a hedge against rising prices. Randy predicts silver could reach $40 based on current supply and demand dynamics.
That's a bold claim. Why do you think that surge is imminent?
Investors really need to pay attention to the silver market.
Gold could exceed $3,000 per ounce by next year.
What supports this prediction?
Gold remains a reliable hedge amidst global financial instability.
Investors need to be proactive with gold and silver in their portfolios.
The time for education on these markets is now.
I'm sold. Bring on the gold.
Today, we're diving deep with Jan van Eck to uncover his thoughts on the financial outlook for 2025.
It's great to be here, Adam. As I said, things seem a bit cloudier now than they did a quarter ago.
Cloudier. So, we should be worried about the future of our investments.
Let's clarify what cloudiness really means.
The inflation risks we're seeing now were exacerbated by government overspending.
How can investors navigate such uncertainty?
It's about identifying macro trends and adapting your portfolio.
Our current inflation stance is more about persistent trends than temporary spikes.
So you're saying inflation isn't going away anytime soon?
Correct. It's a critical factor influencing investment strategies.
Both gold and Bitcoin have shown resilience against inflation.
But with Bitcoin's volatility, is it a safe investment?
It fluctuates, but as long-term assets, they can yield significant returns.
We need to look internationally. Markets like India are on the rise.
Is China also a viable option, despite all the concerns?
Yes, especially sectors with strong growth potential. Jan believes we may face tough economic conditions moving into 2025.
That could certainly impact market stability.
What should we be doing to prepare for these uncertainties?
Keep in mind the importance of smart investing during turbulent times.
By having a strategic approach, we can weather the storms ahead.
So adaptability is truly the name of the game.
What an insightful journey we've just had.
Absolutely. We delved into everything from inflation risks to the rising tides of Bitcoin.
John Van Eck's analysis on inflation is especially poignant, isn't it?
Yes, and it's interesting how Randy Smallwood stands firmly on the potential of silver.
Right. And I find it fascinating that while they agree on the shifting economic landscape,
they diverge on how quickly inflation will impact those investments.
Totally. And Matthew Tuttle's take on Bitcoin as a psychological milestone was a surprise.
Definitely a thought-provoking perspective. They all seem to agree that adapting investment strategies is key.
If you found value in this discussions, be sure to show your support.
Hit that like button and subscribe for more nuanced discussions like these.
Thanks for tuning in, and don't forget to check out our other videos for even more financial wisdom.